Here's something most UK employees don't realize. Every time you get paid, you're probably leaving hundreds, maybe thousands, of pounds on the table. Not because of bad investments, not because of high fees, because of something sitting quietly in your payroll settings that you've never changed. It's called salary sacrifice, and once you see the maths, you won't be able to unsee it. Let's run through a real example. Say you earn $45,000 a year. You decide to put 5%, that's $2,250, into your pension via salary sacrifice. Here's what actually happens. Your taxable salary drops to $42,750. Because of that, you save income tax at 20% on the sacrificed amount, plus national insurance at 8%. On $2,250, that's $450 in income tax saved, plus $180 in NI saved. Total saving, $630. So your take-home only drops by around $1,620, but your pension receives the full $2,250. You've effectively bought $2,250 of pension saving for $1,620. That's a 28% discount built into your payslip. But here's where it gets even better, and where most people completely switch off, which is a mistake. Your employer also saves national insurance on the amount you sacrifice. Since April 2025, that rate is 15%. On your $2,250, your employer saves $337. A good employer, and many do this, passes that savings straight into your pension pot on top. So your pension could receive $2,587 for a net cost to you of $1,620. That's money that simply didn't exist before, created by a payroll setting. Now, the part that makes this genuinely urgent. In the November 2025 budget, the Chancellor announced a cap. From April 2029, national insurance will apply to salary sacrifice pension contributions above $2,000 per year. Below $2,000, nothing changes. But above that threshold, the NI exemption disappears. On a $5,000 total sacrifice, NICs would apply on $3,000 of it, costing the employee extra and costing the employer extra too. The OBR estimates this raises $4.7 billion in 2029 alone. That's how significant the current benefit is. So what does this mean practically? You have roughly 3 years, until April 2029, where the full, uncapped version of this benefit still exists. If your employer offers salary sacrifice, if you haven't checked whether you're enrolled, or if you've never asked whether your employer passes their NIC saving back to you, now is the time to look into it. One more thing worth knowing. Salary sacrifice reduces your adjusted net income. If you earn between $100,000 and $125,140, that's especially important because it affects the taper on your personal allowance. And if you're close to the threshold for tax-free childcare or the 30-hour free childcare offer, bringing your adjusted income down can unlock those too. The bottom line, salary sacrifice is one of the most efficient ways to save for retirement in the UK. And it's been quietly getting better while most people ignore it. The deadline is real. The maths is in your favor. Check your payroll.